A major shift is underway in traditional finance, as Citi plans to launch crypto custody services by 2026. This means institutional clients, like asset managers, will have a regulated way to store native cryptocurrencies, such as Bitcoin and Ethereum. This move, utilizing a hybrid model, signals Wall Street's deeper embrace of digital assets amidst a more crypto-friendly regulatory climate. What if yesterday's massive crypto crash wasn't just market volatility, but a calculated act of manipulation? Crypto analyst Miles Deutscher alleges it was a textbook case, executed on an illiquid Friday evening, amplified by a Trump tariff headline and altcoin open interest buildup. He points to Oracle/API risks and warns traders to monitor liquidity gaps and infrastructure reliability, especially for leveraged altcoin positions. If you thought the October 11th crypto market crash was just a random sell-off, think again. Reports indicate a coordinated exploit targeted Binance's unified account margin system, manipulating collateral assets like USDe, WBETH, and BNSOL. This vulnerability, allowing yield coins as collateral with internal pricing, amplified liquidations, causing up to $1 billion in estimated losses. This isn't just luck. An anonymous trader made nearly $200 million shorting Bitcoin and Ethereum moments before a critical U.S. tariff announcement. Executed on hyperliquid, these trades netted over $160 million, as Bitcoin and Ethereum plummeted following the tariff news. This suspicious timing, just an hour before the announcement, raises serious questions about market integrity and potential insider information. If your Trust Wallet balance suddenly shows zero, don't panic. Your crypto isn't gone. This is a temporary display glitch, a synchronization issue, not an actual loss of funds. Your assets remain safe and secure on the blockchain. Remember, Trust Wallet is self-custody, meaning you hold your private keys. Never share them with anyone, especially scammers exploiting this situation. An on-chain investigation has just unveiled a stunning connection. A massive hyperliquid whale, controlling over 100,000 BTC, is now linked to Garrett, the former CEO of the scandal-ridden BitForex exchange. This discovery raises serious questions about Jin's financial integrity, especially after BitForex's collapse due to a $57 million hot wallet hack and fraud allegations. His recent removal of xhash.com from social media bios further fuels suspicion, though some analysts remain skeptical about the evidence's simplicity. The crypto market just achieved a stunning $4 trillion rebound this Sunday, defying expectations after a massive $500 billion crash. Ether, BNB, and Dogecoin led this recovery with double-digit gains, as analysts now eye Bitcoin potentially hitting $200,000 by 2025. Major players like Bitmine and Strategy capitalized on the dip, reinforcing the buy the dip mentality in this volatile asset class. A $19 billion crypto liquidation just hit the market. But what if I told you one project was completely immune? Solana's $1,000 target by 2026 faces uncertainty from tariff fears and market volatility, pushing its price to around $182. Meanwhile, Remittix, a PayFi project with real-world utility for crypto-to-fiat transfers, remained stable, attracting investors with its infrastructure-focused approach. This isn't just a rebound. Ethereum's derivatives markets are showing surprising stability after a massive crypto flash crash. Perpetual contract distortions are fading, and monthly futures premiums are back to neutral, indicating reduced short-term fear. ETH outperformed most altcoins, backed by strong spot ETFs and options open interest, setting its sights on reclaiming $4.500. Ethereum's price just doubled, but a key on-chain metric reveals a surprising trend suggesting this cycle's peak is still ahead. Typically, large exchange withdrawals signal a market top, like everyone cashing out. However, as ETH surges, these withdrawals are actually decreasing. This deviation, fueled by whale accumulation, implies more upside potential, though recent volatility demands careful risk management. While most cryptocurrencies stumbled after the recent tariff shock, BNB staged an impressive recovery, raising questions about its unique resilience. Binance founder CZ clarified that unlike many projects, BNB operates without market makers, attributing its strength to builders, community, and a deflationary model. Technical analysis shows BNB breaking key resistance, confirming strong recovery momentum and solidifying its ecosystem's active development. If you hold stablecoins, you need to hear this. Ethena's USDe, designed for stability, briefly plunged to 65 cents this week during a massive $19 billion crypto liquidation event. This dramatic Depeg was triggered by a tariff announcement, sending investors fleeing, but USDe quickly regained its dollar parity and maintained over-collateralization. Ethena Labs confirmed mint and redeem functions remained operational, with multiple third-party institutions verifying its $66 million excess collateral, proving the protocol's underlying resilience.